India's recent GDP growth, is it really as impressive as it seems? Analysts raise questions over data methods. India's recently reported GDP growth numbers might look impressive at first glance, but many economic experts argue that the way this data is calculated could be creating a misleadingly positive picture. This controversial topic has stirred debate among analysts who believe the underlying methodology warrants closer scrutiny. Here's the crux. India's official GDP growth figures seem to show a robust expansion of the economy. However, some analysts caution that these numbers might be significantly influenced by changes in how economic data is compiled, rather than reflecting genuine, strong performance across the board. In simpler terms, the numbers might be flattering the reality rather than accurately depicting it. Why does this matter? GDP, or gross domestic product, is one of the most vital indicators economists, investors, and policymakers use to gauge how well a country's economy is doing. If the data is skewed or artificially enhanced due to the calculation techniques, this could lead to over-optimistic conclusions about India's economic health and prospects. For example, adjustments to the base year for GDP calculations or revisions in the methods by which certain sectors are evaluated can disproportionately boost reported growth rates. Without transparency and consistency in these methodological choices, it becomes challenging to assess how much of the growth is due to actual economic activity and how much is a statistical artifact. And here's where it gets controversial. Some argue that the government uses these calculation strategies to present a more favorable economic narrative, which could affect everything from foreign investment decisions to domestic policy planning. But others insist that evolving measurement methods are necessary for keeping up with a transforming economy, especially one as complex and fast-changing as India's. This debate opens up broader questions about the reliability of economic statistics and the importance of understanding context behind headline figures. It also emphasizes why investors and analysts should look beyond the surface of GDP numbers and consider a fuller picture, including employment trends, income levels, and sectoral performance. What do you think? Should we accept India's growth story at face value, or be more skeptical about the data behind it? Have you noticed similar patterns of data interpretation in other countries' economic reports? Share your thoughts and join the conversation. Because when it comes to understanding our economies, the devil is often in the details.